All right, welcome back to Liquor Business. My name is Simba Kiage. Thank you very much for still sticking around since we started the show. At this time, I want us to get into the bigger conversation at this moment. But we're calling it a markets outlook. But then most of the times, then we tend to know exactly what is happening on our local markets. And tonight, I just want us to look into the international outlook, because we do know very well that indeed it's very important for you to know what's happening in the international markets, because it's possible today, from where you're seated, to invest in international markets, commodities, stocks and indices across the world. Now, it is February, and at this time, the international market is talking about one thing: adjusting from the effects of the coronavirus pandemic in 2020, 2021 and 2022 was considered to be a rebound year. The question that we're asking is, what is 2023 for the different segments then of these international markets that we're getting into? Now, one good thing is that FXpesa has launched their monthly reports, and I'll be telling you why it's important for you then to read so much into the monthly reports for FXpesa, because indeed they've made it easier for you then to understand what trends you should be looking out for should you get into investing in the international markets. And joining us at this time then to talk to us further into those reports and exactly what you need to know into those various segments, we are joined by Rufas Kamau, who is a market analyst at FXpesa. Rufas Kamau, how are you doing, sir?
I'm very fine.
For anybody looking to understand what this report will be focusing on and why indeed you've decided to launch them, what will you tell them?
One of the bases or reasons we started this report is to help our clients and potential clients to understand what happened over the last 1 month in the global financial markets, and then what to look forward to. So on one side of the report is looking at how the month performed. So we look at the assets performance, we look at equities, we look at bond markets, forex, commodities. And once we see the events that happen over the month and the movements in prices,
yes,
then we project an outlook for the oncoming month. So we also focus on the economic reports from various central banks around the world. And once we grasp what we're expecting, then it's easier to make an investment decision.
Pretty much. So this report, for anybody who's going to read them, who is this person who's supposed to read this report? Let's look at this profile of this guy who's going to say, well, I have to subscribe into this monthly reports from FXpesa, and why do I really need to read into them? Who are you looking at?
So we're looking at potential investors as well as our clients.
Yes.
And by definition, it's literally anyone. Like our goal is to democratize access to financial investment products. So any Kenyan, you can be African, any part of the world, as long as you're looking to invest in the global financial markets. Let's say you want to, buy some US shares, you don't understand the economy or some financial economic data in the US, then we help break down this information for you to easily digest the information, and then when you're making an investment decision, you make it from an informed perspective.
Pretty much. All right, let's go back then and start breaking down the areas that your report touches on. And I would like to begin from this perspective as we build up to what is the most important then, stocks. Let's begin from the commodities. And we go back to how Bitcoin has been performing. People will tell you, well, it's been hot and cold. It's now that we're rising back again with Bitcoin. 2022 wasn't necessarily a very good year for Bitcoin as well. 2020, you go back as well. People will tell you, well, use gold as a hedge asset. Looking at how commodities have been performing in international market, would you still say 2023 going to gold, because then it's almost a sure bet?
I wouldn't say it's a sure bet.
Yes.
If you look at what happened last year, there was a lot of inflation across global markets. So in the US, we saw inflation go up to 9.1%. Majority of the Eurozone is having an inflation rate of above 10% over the last 1 year. So you would expect in such an environment that investors would go for gold, and you would see gold trending higher. But in actual sense, what happened last year, gold actually lost money over the entire 2022. So what we are seeing here is investors changing their tactics and then looking for other assets out there to use as an inflation hedge. So the best performing inflation hedge last year was the US dollar.
Yes.
So main reason this was happening is because the central bank was tightening. Basically, they reduced all the quantitative easing, or in simple terms, all the money they were pumping into the economy, they reduced to zero, and then they started hiking interest rates.
Yes.
So this created a dollar scarcity, which eventually led to a very strong dollar. So companies would offload their positions in risky assets, and then they would go cash. They would basically just buy dollars and hold on to dollars. And then over time, they realized that the dollar was gaining. So when you take that consideration, and also you look at the short-term bonds, then they would go for the rising rates. Last year, they were doing 3.8 up to 4%.
Yes.
So they will literally just invest in bonds, and they will get a good return.
Pretty much.
Yeah.
So gold's not necessarily a hedge asset, isn't it?
Yes, it's a good long-term hedge assets, mainly because it tends to preserve value over time.
Yes.
But then, when you look at a tricky situation such as last year, it was much easier to make a decision to invest in the US dollar rather than gold. So it's not a permanent relationship. There are some times when people use gold as a good hedge.
Yes.
There are other times when people use other assets as a hedge. Yeah.
So for which investor profile, somebody's listening to you and saying, well, it's not essentially the hedge assets, as we were talking about it in 2023 as well. For somebody who's listening to you now, who would want to get into commodity investment, and you decide that I'm going to just trade in commodity investments, and from FXpesa, how do you help an investor make a decision on which commodities to get into?
So when it comes to commodities, they are pretty simple to understand because they're not complex, they are standardized assets.
Yes.
So when you think of gold, it's sold in ounces. If it's oil, it's in barrels. But then when you're making your analysis about how to invest in a commodity, you only want to understand two dynamics of the commodity. On one side, you want to know the supply of that commodity, and on the other side, you want to know the demand for that commodity. So once you draw your projections on both, then it's easy to predict the direction the commodity will take.
Okay.
For instance, last year, we saw oil going up, and it was big challenge globally. Even here in Kenya, we felt the pressure from the high oil prices. So if you looked at both sides, demand and supply, majority of the economies were just coming from COVID, so they were quite expanding, very good recovery, especially in the US. On the other hand, when you look at supply, a major supply coming from Russia was cut down. So with a less supply and high demand, the result was obviously higher oil prices. So we try and identify those factors that influence the demand and supply of a commodity, and then we break this information down in the outlook report.
Yes,
Yeah.
pretty much. Let's move on to the next area that your reports are going to be touching again for the entire 12 months of this year. And that is a critical area, that is the stock market. That's why the bigger conversation then starts in essentially what do I need to understand when it comes to the international stock market. For someone who wants to break it down, what areas are your report touching on, especially when it comes to the stock market, and why?
When it comes to the stock market, it's really wide. There are thousands and thousands of companies out there.
Yes.
So we try to focus on the most liquid companies. In this case, we look at the top companies trading in the New York Stock Exchange. We look at the European exchanges as well as the NASDAQ. So when we identify those top liquid stocks, then we try to analyze the sectors that are bound to perform well in the near term.
Yes.
So we look at the next 1 month, next quarter, and then outlook for the year. So sometimes there are sectors that are almost obvious to invest in. Sometimes there are hidden gems that people don't know about. So as part of the research, we try to identify what has the most potential to move in a certain direction. So at the same time, sometimes you'll find things like what was happening in January. There was the AI wars. So we have seen ChatGPT trending all over. So yes, on one side, you'll go to social media, you'll see ChatGPT, there's Google's Bard, and so on. But then we try to dig deeper to understand the value proposition of such products and see what impact such products can make in a stock.
Yes.
Yeah. So, for instance, you might be looking at Google. They have their own AI. Microsoft has a big stake in ChatGPT.
Yes.
So potentially, if that AI can create value, we try and break down this information so that the average investor in Kenya can understand what's really happening and where the opportunity is at. So the entire idea of investing in global companies is to try and revert this cycle where we have a majority of Kenyans being consumers of these products, but never owners or investors.
Indeed.
So, for instance, I can bet since this morning you've probably used like 10 international products.
I think so, isn't it? I think so. I have one in my hand right now.
Yes.
It's an Apple product.
Yes.
And I'm not an investor in the Apple stock.
Exactly.
Yes.
So we find ourselves in this tricky situation where we are literally consumers of these products.
Yes.
On one hand, you're using Google, you're using Microsoft, you're using Apple.
Yes.
All these products, they tend to reach us and we spend money on them. But then when it comes to investing, we just limit ourselves to this small cocoon in Kenya, despite the digital advancements we have made over time.
Yes.
So it makes more sense if you're looking to invest in a stock, then you invest in the best performing stock ever. So in this case, it basically means opening up wide, focusing on like the top dominant stocks,
yes,
and then finding rare opportunities in those companies.
Yes.
Yeah.
But I'll tell you, there's a question that I really got, and probably you'll be including it in your reports as you go by, because we expect these reports are going to grow as time goes by. But when we're talking about international stocks, we're looking at these bigger companies that are quite liquid. We're looking at the Teslas, we're looking at Apple, we're looking at Facebook, looking at Coca-Cola and all that. When you look at the way they performed, and that's the question that I was told to ask you, when you look at the way they performed towards the end of last year, that was a period when we were reading a lot of reds in majority of these companies. You wake up in the morning and a lot of wealth is being wiped off the market. Somebody asked, is it just the very liquid stocks that I should be going into in the international market? And if it's not, then because these bigger stocks then will tend to attract both good returns, and they are also very much exposed to volatility as well. If not, what other areas should I be looking at in the international stocks in?
So on one hand, there's an advantage in going for the big stocks.
Yes.
Of course, the obvious advantage is the liquidity. That is, anytime you want to buy or sell, you get very good pricing. So in addition to that, the chances of these big companies collapsing are very minimal. So by going for a highly liquid company, then you're reducing the risk exposure. So if you go for a much smaller company, then there's a higher risk of losing your money.
Yes.
So by focusing on just the liquid companies, you already have an advantage on your side. So on the other hand, there's this issue we normally call follow the money. So if the likes of Warren Buffett, all these big investors are going into these companies, then you literally take advantage of their research. So if they have invested in a very good research department and they have identified that this is the stock we are going for, then for you as an individual investor, you can take advantage of that and invest in such a stock.
Yes.
Yeah.
But when you're looking at the way these bigger stocks, the likes of Tesla, likes of Apple are performed, there's an inclination now towards AI and technology and intelligence. For somebody who's listening to you, I was looking at the report as well. Your analysis also did essentially touch on these companies. Should I only just put my money in tech and technology companies, or there are other areas that I could look into?
There are literally 11 different sectors in the SP 500 in the US.
Yes.
So you don't have to focus on tech. For instance, last year, tech was among the top losers in the US stock market. So we saw big companies losing big time. I think Tesla was down 69% on the year.
One of the biggest losers, yes.
Yes. Yeah. Funny thing, today, like since the beginning of this year, it's up 69%. So it's that volatile.
Yeah.
So tech sector was doing bad. Also, other sectors were equally doing bad.
Yes.
Main reason this was happening was because of the monetary policy. So with the US tightening and raising interest rates, then this eventually led to a bear market that lasted the entire year. January started with a very strong optimism. That's why the likes of Tesla are up. But then there are hidden gems and sectors that tend to perform well under different market conditions. An example, if you look at the energy sector, it really did well. It was the best performing sector in the US last year.
Yes.
Companies such as Occidental Petroleum did up to 100% returns in a year.
That's huge.
Yes.
That's huge.
That was massive, yes.
That's massive. 100%.
Yes.
Whoa.
Yeah. And literally all you had to do is follow the money. Like there was a very public information that the likes of Warren Buffett and other investors were going for that stock.
Yes.
And you just buy that stock from an app, then you'd be up 100%. Yeah.
Interesting.
So,
yeah.
There are many sectors that are varied and also many subsectors. So when you're trying to analyze and look for potential opportunities,
yes,
first of all, we consider the macroeconomic environment and its effect
yes,
on the market. For instance, the current trend where the Fed keeps on hiking rates, basically
yes,
pulling liquidity out of the markets. So the consumer is finding themselves under more and more pressure from higher interest rates, and at the same time they're experiencing high inflation. So it might make more sense to look at the things that people really need this year. So a good example, no matter what happens to the economy, you're still going to buy food. So if you're investing in a food company, then you know that that company will continue making sales regardless of the status of the economy, okay? So there are those products that you can't do without. We call them staples. Another thing you look at is things like insurance, healthcare. Whenever you need healthcare, it doesn't matter the financial conditions, you'll still purchase those products. Yeah.
Yeah.
So in such a tricky environment where rates are rising up and inflation is high, then you find a lot of investors rotating towards that angle. Yeah.
Pretty much. It's a good thing that you're actually speaking about it, because I want us to jump into the equities market in general. I mean, two things would define how the equities market closed last year and even opened this year. A conversation on interest rates and on the side as well, inflation, which essentially go hand in hand. The only reason as why the Fed has been increasing interest rates is to fight inflation, worldwide phenomenon right now.
Yes.
Do we anticipate that this phenomenon of rising interest rates, even yesterday we're reading of still some central banks bumping up the interest rates, is it going to go into Q2 as well? And when do you foresee this coming out? With the whole talk about the economy was supposed to collapse last year, we haven't seen it collapse, we're still talking about it this year as well.
Yes. So it's a very funny scenario that's happening currently, majorly in the US and in the Eurozone.
Yes.
The US economy made a surprisingly high number of jobs in January, which was up by over 500,000 jobs. So the other key data point that we saw happening in the US is that wages are rising, and this is tricky. So while the central bank is trying to tighten the economy,
yes,
so that inflation can go down, then they also focus on this data to make decisions. So as long as the job market is getting tighter and tighter, currently the unemployment rate is at, I think, a 44-year low of 3.4%.
Yes.
So this means that literally everyone is employed, there is high production, people have more income, and there will be more money flowing in the economy, which eventually drives inflation higher. So in that case, investors are already pricing in that the Fed will continue to hike interest rates to keep pulling off this liquidity. So it's one tool that is being used to raise interest rates, but the effectiveness in the economy is not being felt so much. So as a result of that, the Fed is pushed into this cycle of keep hiking interest rates, hoping that the excess liquidity will be out of the market. So we are seeing the market pricing in another 25 basis point hike in the next meeting in March,
yes,
and potentially yet another one by mid this year. So we could be seeing US interest rates get to 5.25%.
That's quite high, isn't it?
Yes.
From almost nothing that's just a year ago.
Yes. March last year, it was 0.25%.
That's nothing.
Yeah.
You're essentially just getting free money, isn't it? Yes.
So with this pace of tightening, it's adding more pressure to the US consumer. Of course, people have to spend more money on products that have higher prices because of inflation. And when it comes to credit card debt, they have to spend more money in paying their credit card debt because of the high interest rates. So as a result, they are left with less money to buy stuff from the economy.
Yes.
Yeah. So this is what has been affecting the stocks downwards.
Yes.
So in the earnings season since last month, we saw a lot of companies doing well. And remember, this is a lagging data point because they are reporting on the last 3 months. But then for their outlook for this quarter and the next, they are kind of revising downwards because they expect the consumer to take a hit from higher interest rates.
Yes.
Yeah.
So is that a point then you would say for somebody who's going into the stock market, just gotta have to put that at the back of your mind that as you go in, be very wary of the fact that the Feds are still not going back on the interest rates.
Yes.
Yes.
So the advantage with the product that we provide at FXpesa,
yes,
you don't have to profit from the price going up only. So if prices are going down, you can also profit by being short the market.
That you can actually advise your investor to short the market.
Yes.
And you do expect that indeed it's going to come.
Yes. So when you do your analysis and realize that this is going down,
tell your investor to short the market.
Yeah, then you short the market. If things are going up, then
yes,
you are up. You are on the long side of the market.
What do you think when you're advising your investors to short the market? Which indices are you looking at? Are you looking at S&P 500?
Point of clarification.
Yes.
We don't advise the investors.
Yes.
We offer educational support. So even in the outlook, we're trying to help the investor understand.
So it's up to you now as an investor.
Yeah, but it's not investment advice. Yeah.
It's not investment advice.
Yeah.
Fantastic. Let's ask a question that came up when we floated. You'll be around again. In this one, somebody's asking, well, out of the indices that you've looked at, all right, all the way from S&P 500 to NASDAQ, which one has been the most performing and which one do you expect to continue gaining straight into quarter two?
I think one of the top performing indices is the FTSE 100.
Yes.
It's the benchmark index in the London Stock Exchange. So it has been really performing well, almost breaking an all-time high. So for any investor who have been looking in that direction, I know they made quite some good money. But then looking forward, I don't expect these indicators to continue doing well.
Yes.
If the Fed gets more aggressive with the rate hikes. So what was happening over January and some part of February is that there was a lot of optimism that eventually central banks will stop hiking rates since inflation was responding well. However, the data we are getting from January numbers in terms of inflation, we are seeing a spike. So, for instance, there was a spike in US inflation. It read 6.4%. It was slightly down on the year from 6.5% in December, but on the month it was moving up. So we are seeing a trend of inflation spiking again to the upper side. So this was happening for the first time in 6 months. So same case was experienced in Germany, Switzerland, UK. So when we see inflation beginning to spike up, then we expect the Fed to get more aggressive, not to slow down.
Yes.
So while the Fed was doing 75 basis points last year, they went down to 50, and then in the last meeting they did 25. So we were expecting that they are winding down, and that would be a very strong basis that the bear market has ended. Now we go up. So that optimism drove a lot of stocks higher.
Yes.
But then we're getting into a newer reality that they could also keep hiking rates higher. And now we are seeing the markets pull back down.
Yes.
So for instance, SP 500 being up about 15% in January, Dow Jones doing something similar. In the last 3 weeks, the Dow Jones index was going down. And remember, this is a benchmark index that represents the industrial companies in the US. So seeing this index go down 3 weeks in a row is basically indicating the new reality that the Fed could keep hiking rates to fight inflation, and this would keep on hurting the economy.
Pretty much. Yeah. All right. Can't believe that we're done with this particular one. Just as we can you summarize it like this, that I mean, the reports have already started coming in, and by the way, thank you very much for releasing them. We're going to give them a big priority right here on a look at business every other month. So that means we have a date every other month, so we can talk about them. For any other person listening to you and saying, well, these particular reports, how necessary are they to me as an investor? Why would they seek FXpesa monthly reports?
One thing that is would be top priority is that the report is data driven. So I know it's hard to like go through the internet looking for all this information, but then we try to find like all the important data that you need to understand before you make an investment decision. So all the content that we put in the report is based on real-time data in the markets.
Yes.
So besides this, there's deeper insights into whatever information you find there. We try to make some investment sense into it. So just like I mentioned with ChatGPT AI, we won't tell you that Google has just invested in ChatGPT, but then you look at the value proposition of that. Yeah. So we also focus on a widespread focus on the markets. So we don't just look at stocks and indices and and commodities. We also look at forex. So we try to project the direction that the currencies will be taking over the next 1 month.
Pretty much.
Yeah. So as an investor, you get an all-round report that basically gives you an idea of what's happening in the market and where the opportunities are headed.
Pretty much. Just a snapshot of exactly what you're going to find in those reports. And by the way, we don't even touch on currencies because we wanted to know exactly how the dollar has been performing. Because once the end of last year, we did see a lot of currencies gaining on the dollar. Guess what? That's a good thing. We might not be able to touch on everything on this particular one, but I'll be calling him back every other month so we can get to actually look into issues of currency, look into issues of how the bigger indices across the world are performing. And you hear he's saying it's very important for you then to learn this, because today, from where you sit, you could actually start investing in the stocks and in these areas that we're talking about right here on Look at Business. Rufus, thank you very much for coming.
Thank you, Simba.
I do appreciate it. By the way, these reports, they can download them from the FXpesa website?
Yes. Yeah.
Fantastic.
So we will be sharing majorly on our socials,
Yes.
not on the website.
Even better.
Yeah.
Guess what? Take him back to the time that he came back right here on a Look Up Business, online at Look Up TV, across all your social media platforms. Talk to me directly at Kiage Simba. Goodbye.